Thanks, Anisha. Good set of numbers expected from HDFC Bank. Well, net interest income is expected to go up a more tempered 13.3% or thereabouts. When we look at pre-provisioning operating profit, that's expected to go up around 11%. Both of these numbers on a year-on-year basis. Now, NII will come closer to that 20,000 crore mark. So that's a new benchmark which HDFC Bank will hopefully look to breach in coming quarters. When we look at slippages as well, provisions will fall by around 20% or thereabouts. It's going to come in at around 3,800 crore is what the street is expecting. Gross NPAs as well as net NPAs are expected to be absolutely flat, while PAT is going to come in flat when we look at it sequentially, but a good 25% bounce when we look at it on a year-on-year basis. Of course, advances, we've already seen these numbers, but advances has grown solid 21% when we look at it on a year-on-year basis. That will, of course, translate much better as the RBI starts hiking rates. In terms of what to look out for and management commentary, one is, of course, the strong growth that's already in the pipeline for HDFC Bank. Mind you, the last 8 quarters has seen HDFC Bank having a 25% market share in incremental advances in the banking segment, and that has pushed its market share higher in the overall banking basket to 11.5% or thereabouts is what reports have been telling us. Of course, credit cards, fee income are going to be key things to watch out for. Asset quality, especially on the agri and unsecured side, will also be looked at. And of course, the big integration between HDFC and HDFC Bank. And within that integration, of course, CASA and liquidity will be key factors which the market will look out for as well.
Harsh, just can you elaborate as far as HDFC Group is concerned in terms of merger? What's happened in the last few days? What does it mean?
Yeah, so there are a couple of interesting things which are playing out with HDFC and HDFC Bank, especially given this merger. So now that the merger ratio is out, if you are looking to invest in HDFC Bank, there are obviously 2 rates available to you to invest. Now, when we look at an investor who's looking to invest for an 18-month period plus, which is looking for his HDFC Limited shares to be converted into shares of HDFC Bank. Let me break this down further. So, for 1.68 shares of HDFC Bank, or rather 1 share of HDFC Limited warrants you a share of 1.68 in HDFC Bank. That's how the ratio is. Now, earlier today, HDFC Limited was available at 2,400 rupees a share, and HDFC Bank was available at 1,480 rupees a share. However, when we convert the 2,400 rupees a share for which HDFC Limited was available to HDFC Bank, it's translating to a cost price of 1,429 rupees a share of HDFC Bank upon conversion at this conversion ratio of 1:1.68. So that leaves profit of 51 rupees a share on the table, which is around 3.5%. So, and this is going to play out over the next 18 months. So, investors need to be on the lookout for this arbitrage opportunity where there are going to be 2 rates available for investors having or looking to invest for an 18-month period plus within HDFC Bank. And how should investors go about this? Of course, everyone should look at the stock price of HDFC Limited, divide that stock price by 1.68 and decide which one is lower, the current market price of HDFC Bank or the extrapolated price of HDFC Bank, which is HDFC Limited's price divided by 1.68. And that will be the lower of the 2 prices is what investors should typically opt for when they are looking to invest.
Okay, Harsh, thank you so much for that interesting analysis.